Hello, friends, and welcome back to Market Shares. I'm your host, Tony Blodgett, and today I wanted to give you a little sneak peek into a conversation that we had here at our company the other day, and just a couple ideas and strategies that came out of this. This was kind of a sales call that we do, and there were some really good ideas, and so I want to touch on a few of them and just share them with all of you, because these are areas where, in our current environment, it's tough to find deals. Now, I'm optimistic, with rates hopefully improving and things getting better as we wrap up, the conflict in Iran. I hope that more opportunity just pours in the door. But the reality is that's not always the case. And sometimes you have to find opportunity in the market. You have to go to where the business is. And for some of us, we don't know where the business is, or it's hidden behind opportunities that we haven't actually considered. So I'm going to talk through a couple different strategies and then a little bit about AI and what I see happening today and how people are leveraging that just a little bit. We'll talk about that for a second. But this first one is a really cool strategy. And I got to give credit to one of our loan officers. His name's Anthony Holt. And he is down in the Southeast. And he talked about a cash out refinance strategy. And at first glance, you go, yeah, okay, I understand the cash out refinance strategy. Like, look for people that have lots of debt, help them consolidate their debt, use some of their equity, lower their monthly payments. I've heard that strategy. Like, that's nothing new. But Anthony had a little bit different take on this, and that's why I wanted to share it with you. Now, I still believe that cash out refinances are a huge opportunity in this market, because despite interest rates being high, interest rates are even higher on credit cards and car payments and all of the other things that people have. And the one thing that most people have that are homeowners is equity. And so the ability to put those two things together and help a family improve their cash flow situation, those opportunities are abundant. And we've been seeing that for well over 2 years now. Many companies that are having good success right now are leveraging cash out refinances. You see it a lot with the call centers because that's what their focus typically is. And it's been amazing to see the amount of transactions that have flowed in the cash out refinance space, specifically in a market where interest rates by most people's, most people feel the interest rates are higher right now, but there's still opportunities. But what Anthony focused in on was working with investors, and specifically focusing on the DSCR product. Now, if you have not done a DSCR loan, this is a debt service coverage ratio loan. This is a mortgage product that is specific to the home that you're financing. So what's great about this loan is, unlike a conventional loan, especially when you're working with investors who own multiple properties, like, let's be honest, if you own multiple properties, you may have had some vacancies throughout the year. You may have had some renovations or improvements that you've had to do to those homes. You have depreciation that you get to write off in there. I mean, not everyone's Schedule E looks great if they have a bunch of properties, because of all the different factors that can come into play and the things that they might be deducting to help their taxable income look a little bit better, right? I mean, we've seen that. The DSCR loan takes the appraised value of what the comparable rents are and uses that as the determining factor on if the borrower qualifies. So what Anthony did is he got connected with a group of investors in his market where they get together on a regular basis and talk about strategies around acquiring a portfolio of real estate. And many of these are actually real estate agents, but many of them are individual investors as well. So he started going to these events and talking about this DSCR product. And he's had, I think Anthony said that 25% of his business last year was the DSCR product, and 50% of his business this year is going to be with the DSCR loans. But it's more than just leveraging the DSCR. What he did is, first of all, identify a group of people where there is a need, many of whom are real estate agents who also have clients that probably aren't in that group that would like to restructure their real estate portfolio and or free up cash to purchase more investment properties. And that's where the real win with this strategy is. It's not just getting the cash out refinance. Oftentimes, these people have owned these homes for a few years. They've built up some equity. Now they're able to do a cash out refinance, take that money and go purchase some other loans. So he gave the example of one of his clients who is doing 2 cash out loans on 2 different investment properties with DSCR financing, pulling that cash out and purchasing 6 more units with those funds, all with DSCR financing, because now they have enough down payment to make the DSCR loan work. So this is just a massive strategy. A huge light bulb went on for me when Anthony was talking about this, and I thought it was something I could share with all of you guys, because I know there's a lot of loan officers out there. Despite all the talk about non-QM lending, people have not really made it a primary focus of theirs to understand these products. And I think the DSCR is one of the easiest and where there's the most amount of opportunity if you leverage it. He also talked about the fact that his business development strategy for this was very much through a social media campaign, right? In addition to syncing up with this investor group locally, he also put out some social media posts geared specifically towards the real estate agent community about DSCR opportunities, learning about fix and flips and the different opportunities there. So a lot of people will use a hard money loan to acquire an investment property, do some repairs to it. They can use a DSCR to then pull that equity out once the renovations are done and go buy some more. So anyway, it's just a brilliant strategy. I encourage all of you to really start digging into the non-QM space. I think it's easier than you think. It's less rate sensitive than other parts of the market because you really are creating solutions for people, specifically investors, and they're more looking for your advice and ideas and strategies than necessarily shopping down to the lowest eighth that they can get. And so there's just less pricing pressure in this space as well, which is a good thing for many loan officers. One other thing he did note is some of these DSCR products have the ability for a prepayment penalty to be added. That helps improve the interest rate on these. And in his experience, at least, he'd only had one investor who pushed back on accepting a prepayment penalty because most of them were planning on restructuring and holding these loans for a period of time. So they welcomed the opportunity for a prepayment penalty because these are technically business purpose loans. You can do a prepayment penalty on them. So just a little nugget there. Okay, the other category that I see people completely just changing their whole business is around builder and new construction. There's obviously opportunities with one-time close and custom construction loans. That's not what I'm going to talk about. I'm talking about going out and building relationships with new construction plats, right? Builders, big builders that do hundreds of homes a year, even medium-sized regional builders. I think there is a real strategy here. And look, I'm sure all of you know somebody who has new construction as a primary pillar of their business. And it is different. I'm not going to lie to you and say it's different. It does require a bit of a mindset shift, okay? But so does, Anthony's strategy, like around DSCR and about going after, investors. This is a mindset shift. And to me, that was the theme of this conversation, is being open-minded to maybe different ideas and strategies you haven't tried in the past. What we learned about builder business is a couple things. One, you do have to realize that many of the big builders out there have their own financing in place, whether that means that they've established a joint venture, maybe they own their own mortgage company, but you guys, there's still massive opportunities with those builders because they typically need a backup option, right? They don't do all of the loan products usually. And so if you're at a, independent mortgage company or even as a broker, you probably have more access to product than many of these builder lenders do. And so the first step is be okay with being a backup to, their primary source, and be respectful of that primary source, right? You have to acknowledge, look, I'm not here to own the business. I'm here to be a great backup lender because builders want their homes sold and they would love to use their mortgage company. The economics are better for them. But the reality is, if that lender can't do it, they need somebody who can step in and handle that financing, and someone who's not going to do it in a way that's disrespectful to their primary source of financing. And that's okay. Being a backup when there's hundreds of transactions a year can be a great place to start that relationship. So don't be afraid of that, and be prepared to, make your presentation around the desire to take on their more difficult loans, the loans that get turned down by their primary lender. Like, you got to be okay with that. The other big thing that we heard is about follow-up. So many loan officers start a new strategy, and this takes time. You're not going to win a builder over in 1 or 2 visits to the site. It's going to take consistency and then follow-up. And so where most people miss out on these is they just don't follow up enough. And then the other thing I would say is you got to be available, right? When they do call, you got to be willing to call back. You probably need to invest some of your weekends if you do land one of these opportunities to, maybe not sit at their development if you're their backup lender, but maybe you got to go to some sit the plat here and there, but definitely be available on the weekend, because turns out that's when people are out looking at homes, right? And so that's where the mindset shift comes. That's where being willing to do things that other lenders aren't. But you guys, it's a built-in consistent source of business. And we've seen people completely relocate across the country into new markets where they have no relationships, put a primary focus on developing builder relationships, and completely built a sustainable business within the first 12 months that they work there. So, or that they live there in that market. So, and then the last thing I would say is I think non-QM plays really well in this space also, because many of these lenders, the builder lenders, they're not going to have the access to the products. So it's one thing to do, a difficult FHA loan or creative conventional financing, but DSCR, right? I mean, there's investors wanting to buy these new homes. So, bank statement loans for self-employed people, bringing solutions that help them move inventory, I think is a tremendous opportunity with builders. So, look for that. If you're not working with any builders, you got to be committed to it, but it can be a great source of business. And I think there's a lot of people who've been doing it for a long time. I think there's opportunity in that space if you're really going to lean into it. The last thing I just want to touch on is AI. You guys, I know you hear enough about AI, but I just want to touch on a few things that I see people doing today that are really saving them a lot of time and freeing up their time to go make more sales calls. And so the first one is helping with loan product solutions. What I've seen, and our company does this, but I'm sure others do as well, or you can build these agents yourself, is building AI agents that can help you with your loan product selection. So this is a huge saver of time in many cases, where you can upload the information and it'll help you identify the right loan products. If you're at a company right now that is not moving in the direction of leveraging AI at a high level, I'm just saying you're probably going to get left behind. So, I know it's a focus of ours. We're not the only ones. It's something that is a huge focus. But you guys, as this market evolves over the next 12, 18, 24 months, you've seen how fast AI is moving just in my opinion, the last 6 months, blowing my mind what I'm seeing different from 6 months ago. From a year ago, it's night and day. So you got to be at a company or you have to have the ability on your own to leverage some of these AI agents. We see them doing full income calculations, self-employed, complex borrowers, multiple W-2s, but you have to have a secure place where you can upload this information and not violate your client's privacy, right? That's why having kind of in-house AI solutions can be super important, because you don't want to be putting people's public W-2s and pay stubs into ChatGPT. We don't advocate for that. And then the other huge opportunity that I've seen is people using AI to comb through their database and look for refinance opportunities, both cash out and rate and term solutions. So, having a database is one thing. Having a strong database that can help you identify opportunities, there's certainly ones out there, but sometimes AI can take it to another level for you and really help you find those opportunities within your database. And then the last thing is just, kind of taking the part of like almost a personal assistant when it comes to like your email management, things of that nature. Have you ever seen an email chain where there's 15 responses back and forth, sometimes more than that, and you're like, I don't have time to read through this whole chain of emails? Well, there's AI agents that will summarize the back and forth and tell you what action items you might need to take. You can automate responses to your emails to show, your follow-up and whatnot that are much more intelligent than just a standard, Outlook, out of office kind of auto response. So there's lots of different things that you can do with AI right now. That's just a couple of them that I wanted to highlight. And if you're not fully in the AI kind of revolution, you don't have to be an expert, but you do have to be using it. You have to start learning how prompts work. You have to start learning how to build agents. You have to start getting an idea of how can I leverage this technology to free up my time to increase my productivity. And the reason why that's so important is because that's what the top performers are doing. And they will run circles around you if you let that kind of chasm between knowing nothing about AI and not using it at all and someone who's using it at a high level. They're just going to beat you in marketing. They're going to beat you in follow-up. They're going to beat you in the amount of time they have to spend doing the busy work of being a loan officer, and they're going to be more available to do the income producing activity. So you guys, it's a game changer. It is leverage in your business, and I encourage you to dig in more to AI. And like I said, if you're at a place that isn't leaning into AI and helping you, that's something to consider as well. So hope you guys enjoy this. I might invite Anthony on to one of these future podcasts. I'm going to talk to him and see if he can, maybe we can spend 30 minutes really diving in deeper into that strategy. But you guys, I would challenge, just like we did on this sales call, I challenge everybody in the next 90 days, if you haven't done a DSCR or a bank statement loan or a non-QM, go find one. Look, if you know those guidelines well enough to be able to present it to a borrower, I promise you, just in your normal course of business, you're going to come across those opportunities. It takes a mind shift. It takes having your eyes open to it. But this is found business, if you're not already leveraging this. If you are leveraging this, you're like, yeah, duh. Because I know people that have completely transformed their production simply by leaning into the non-QM space, and they are gobbling up market share. They probably wish I wouldn't share this with you because they want less people doing it. But that's not what we're about here at Market Shares. We're about abundance thinking, and I hope these ideas gave you a little inspiration that you can incorporate into your business right away. You guys, thank you for your time and attention. Thank you for checking out Market Shares. If you like it, consider subscribing, but also tell someone about it. Let someone know what we're doing over here at Market Shares. And until next time, take care.